Hey there, savvy investors. It's Iggy from Investing Iguana, and today, we've got some exciting news from the aviation sector to discuss. In our video titled SATS Stock Forecast, Analysts by Call and What It Means for Investors, we're diving into the recent buy call from UOB Kay Hian analyst Roy Chen on Singapore Airport Terminal Services, also known as SATS. But what does this really mean for you, the investor? I'll be breaking down the details of this forecast, the reasoning behind the buy call, and how the expected upturn in air traffic and cargo demand could propel SATS's earnings in FY 2024. Whether you're a seasoned investor in the aviation industry or just exploring your options, this analysis is tailored to give you a clearer perspective on SATS's potential. So, let's get into the specifics and see what opportunities SATS might hold for your investment portfolio. Renowned analyst Roy Chen from UOB Kay Hian has just reiterated a confident buy call on SATS with a steady target price of $3.2212. As we cruise into FY 2024 ending March 31st, the wind seemed favorable for SATS, thanks to an expected boost in air traffic and a global surge in air cargo demand. Now, let's dissect Chen's analysis. His target price is anchored at 16.8 times SATS's FY 2026 price-to-earnings ratio, PE, sitting one standard deviation below SATS's historical mean PE of 19.9x. It's intriguing to note that compared to other players in Singapore's aviation sector, SATS has been somewhat of a straggler in terms of earnings recovery. However, there's a twist in the tale for FY 2024. Chen is predicting a swift recovery for SATS, a company that is expected to bounce back in the fiscal year 2024. This positive outlook is largely due to the visa-free agreements established between China, Singapore, Malaysia, and Thailand. These agreements are likely to stimulate the return of Chinese tourists to these regions, thereby boosting regional air traffic. The surge in air traffic could prove advantageous for SATS. It's anticipated to significantly enhance their in-flight catering and flight handling businesses. To put it simply, an increase in flights translates to more passengers, and more passengers equate to a higher demand for in-flight meals and services. Meanwhile, a situation is unfolding in the Red Sea that could potentially revolutionize air cargo. This development could be beneficial for SATS, providing substantial support to the group's cargo performance, particularly in the traditionally less busy fourth quarter of FY 2024. Chen's predictions extend beyond mere numbers, they paint a picture of growth. He projects SATS's net profit in the third quarter of FY 2024 to range between $25 million and $35 million. This represents a significant rise from the second quarter of FY 2024's $22.1 million, and a dramatic turnaround from the third quarter of FY 2023's modest profit of just $0.5 million. Let's break down Chen's analysis for SATS stock. Earnings recovery and market position. First up, SATS is expected to see its earnings recovery gain traction in FY 2024. This optimism is driven by the continuing recovery in air traffic and a growth spurt in global air cargo demand. As travel normalizes post-pandemic, and with Singapore being a crucial hub in the aviation network, SATS is well positioned to reap the benefits. Impact of regional developments. Chen's analysis points towards the visa-free agreements between China, Singapore, Malaysia, and Thailand, which could herald the return of Chinese tourists to the region. This is particularly significant for SATS, as increased regional air traffic directly translates to higher demand for its in-flight catering and ground handling services. Pricing and valuation. Chen's target price for SATS, pegged at $3.2212, is based on 16.8 times SATS's FY 2026 price-to-earnings ratio. This valuation, although conservative, reflects a cautious optimism, considering the stock has been lagging in terms of earnings recovery when compared to its peers in the Singapore aviation sector. Global and regional economic factors. It's crucial to factor in the broader economic conditions. As Singapore's and the region's economies recover from the pandemic's impact, consumer confidence and spending on travel are likely to increase, benefiting SATS. However, any global economic downturn or resurgence of health crises could temper these expectations. Competitive landscape. While SATS is a leading player in Singapore, the competitive landscape in the aviation services sector is evolving. Innovation in service offerings and efficiency in operations will be key for SATS to maintain and enhance its market share. Investor sentiment. The buy call from a reputable analyst like Chen tends to boost investor confidence. However, investors should also consider the stock's past performance, its ability to meet future earnings expectations, and the overall health of the aviation industry. And that wraps up our in-depth look at SATS and the implications of UOB Kay Hian's buy call for investors. From the strategic expansions to the anticipated surge in air travel and cargo, we've covered the factors that could make SATS a potentially lucrative investment in 2024. Remember, keeping abreast of such analyst insights can be a game-changer in making informed investment decisions. If you found this analysis helpful and want to stay updated with more such insightful investment content, don't forget to hit that like button and subscribe to Investing Iguana. Your support helps us bring more valuable market insights directly to you. Also, feel free to share this video with fellow investors who might benefit from this information. Stay tuned for more from Investing Iguana, where we make investing an adventure. Until next time, keep your investments smart and your returns high.